The U.S. aerospace industry generates more export sales than any other U.S. manufacturing industry. It exported almost 65% of all production in 2012 and generated over $70 billion in exports. The industry employs 500,000 highly skilled workers and gives rise to 700,000 jobs in its supply chain companies. Industry sources project that the industry will produce 34,000 large commercial airplanes over the next 20 years, and those planes will be valued at $4.5 trillion. This projection represents a solid 3.5% growth each year. The industry also benefits from spending on defense. Given the state of instability in the world, defense spending is likely to increase, thus benefiting the industry further. Let's take a look at some of the best aerospace and defense companies TheStreet Quant Ratings says you should add to your portfolio immediately. Number 6 is Textron. With an A rating, the company's strengths can be seen in its revenue growth and compelling growth in net income. 5th is Raytheon. This rating is also an A. Raytheon thrives in its notable return on equity and reasonable valuation levels. Number 4 is General Dynamics. With an A rating, the company flourishes in its revenue growth and increase in net income. Number 3 is Honeywell International. With an A rating, the company's strengths are in its increase in net income and notable return on equity. 2nd is United Technologies. This is also an A rating. The company has an impressive record of earnings per share growth and increase in net income. And number 1 is Rockwell Collins. With an A+ rating, the company has good cash flow from operations and growth in earnings per share. TheStreet Ratings are algorithmic stock picks based on 32 major data points. S&P 500 stocks rated buy yielded a 16.5% return in 2014, beating the S&P 500 total return index by more than 300 basis points. For the full reports on these stocks, you can check out thestreet.com/quant ratings. In New York, I'm John Kostakopoulos for The Street.